Market Analysis, November 27, 2023. Good morning, everyone, and thank you for choosing Market Briefing, Market Analysis, and Financial News. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Markets got off to a sluggish start this week as shares fell across Asia-Pacific indices. Chinese property sector weakness dragged down both Hong Kong, with the Hang Seng Index slipping 0.4%, and mainland shares as represented by the CSI 300 index of major blue-chip companies which lost 0.8%. Japan's Nikkei 225 also closed out 0.5% lower on the day. Though U.S. equities posted 4 straight weeks of gains, futures are pointing south heading into the new week as Treasury yields sit around multi-month lows. E-commerce breaks records despite economic caution. U.S. online spending popped to fresh highs this Black Friday weekend even amidst inflation concerns. Sales across e-retailers rose 7.5%, topping $9.8 billion according to Adobe Analytics. The popularity of buy now pay later financing options also illustrates consumers' stretched budgets. BNPL usage jumped 47%, accounting for nearly $79 million of purchases. The flexible payment offerings are increasingly used to finance bigger ticket items online. CinemaSee improved ticket sales. The movie industry is making a modest recovery with this year's Thanksgiving weekend box office sales hitting around $172 million. While still below pre-pandemic levels, it marks improvement over 2020 and 2021 figures. New releases like Lionsgate's latest Hunger Games film enjoyed a $42 million second week showing. Meanwhile, Apple and Sony's big-budget Napoleon Epic took in an estimated $32.5 million domestically. Studios hope the momentum carries into the end-of-year holidays. Israel secures hostage release and ceasefire deal. A number of hostages held by Hamas in Gaza have been released as part of a temporary ceasefire agreement. Those freed include a 4-year-old Israeli American among 17 let go on Sunday, bringing the total release so far to 41. The truce deal stipulates 50 Hamas detainees will be freed over the 4-day period in exchange for captive Israelis. Israel has so far released 39 Palestinian prisoners over the initial 2 days of the coordinated pause in violence. Both sides hope meaningful negotiations can follow. Investors eye alternative proteins' next wave. With plant-based food company valuations cooling after previous exponential growth, analysts are asking what's next for the alternative protein space. Seed breeding improvements is one area gaining traction as developers examine how to sustainably address food supply for a growing global population. Weight loss drugs tied to agricultural science is another niche intersecting with consumer health trends. Though currently flying under the mainstream radar, these agriculture biotech startups show promise to shape the future of meat alternatives. Semiconductor export curbs unevenly felt. As the Biden administration rallies allies to cut off China from sensitive tech, further export control updates aim to close loopholes in last year's AI chip restrictions. But the impact is varying across the semiconductor sector. While equipment giant ASML expects rules to minimally affect its 2023 outlook, Nvidia warned slowing China sales amid geopolitical tensions will directly hit fourth-quarter returns. Efforts to compete in China against local players like Huawei makes it especially vulnerable. Beyond direct sales, tensions are also slowing production plans like Nvidia's launch of a new AI product line compliant with U.S. trade rules. The uneven repercussions illustrate how politics and business remain intertwined in the tech sphere. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Gold tested but failed to stabilize above the key $2,000 level this week due to thin holiday trading volumes and a lack of major fundamental drivers. However, bullion remains in an uptrend and the precious metal could make another push towards $2,000 next week as high-impact economic data releases and commentary from Federal Reserve officials have the potential to move markets. On Tuesday, Gold prices climbed to their highest point since early November, briefly topping $2,000 after the release of the latest Federal Reserve meeting minutes. Although the minutes contain some hawkish remarks about the need for further policy tightening, the US dollar struggled to gain traction as risk asset flows continued to provide support. The minutes had limited impact as the Fed gathering occurred prior to the better-than-expected US inflation data for October, which bolstered expectations of earlier Fed rate cuts. By midweek, a rebound in Treasury yields weighed on gold, pushing prices back below $2,000. As U.S. markets closed Thursday for the Thanksgiving holiday, trading volumes thinned out substantially, leaving gold to consolidate around $1,990 for the second half of the week. Looking ahead, Tuesday will see the release of U.S. Q3 GDP second estimate figures. A significant downward revision from the initial 4.9% reading could undermine the dollar and lend support to gold. On Thursday, the core PCE price index will provide insight into U.S. inflationary pressures. Unless the monthly reading rises more than 0.5% in October, expectations for Fed rate cuts beginning in 2024 are unlikely to shift. Additionally, Friday's ISM manufacturing PMI could impact gold if the index posts an unexpected rebound back above 50. Alongside the slate of U.S. economic data, commentary from Fed officials including Fed Chair Jerome Powell could sway gold prices next week. Markets are currently pricing in a 22% probability of unchanged rates by June 2023, but hawkish signals from policymakers could push back against these dovish expectations and limit gold's upside. On the technical side, the daily relative strength index remains flat near 60, signaling a lack of strong momentum either way despite gold's bullish bias. Once the $2,000 level can provide support, buyers could target $2,010 and $2,040. Support sits around $1,980 at the 20-day SMA. A daily close below here may open the door to $1,950 or near the 200-day SMA around $1,935. While thin holiday trading restricted major price swings this week, gold remains in an uptrend above $1,990 with bullish targets near $2,000 and above. Next week brings higher volumes alongside event risk from economic data and Fed rhetoric that could spark volatility. Traders will closely watch U.S. growth, inflation and manufacturing figures alongside central bank commentary for signals on policy outlooks that may impact gold's next move. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.